May profits be upon you. Let's take a look at the US stock exchanges. All right, we're going to go over the S&P, the NASDAQ, and the Dow. All right, first we're going to start with the S&P. All right, the first thing I want you to see is the weekly, right? And I want you to see the structure. All right, this, you see how it had this long period of bullishness, right? And then at the beginning of the year, price took a dramatic change. All right, we broke structure to the downside, and it's been pretty bearish since, right? Let's take a look at this in this way. Starting from here, all right, I have this as the swing low. I have this as the swing high. Lower low, lower high, lower low, lower high, lower low. And then, well, what do we have here? A break of structure. What does that mean? That means we have turned bullish. All right. The market is bullish as of this moment when it breaks that high. The thing is, are we just facilitating a larger pullback? You know, from that low, from this swing high, you know, maybe this isn't the swing low and the swing high that should be included as the beginning, the end and beginning of a trading range. Maybe we should be looking at this as one leg of structure. Maybe. And maybe this is just facilitating a larger pullback into premium price. You understand what I mean? All right. And I also want to bring your attention to this magic trend line. I call it a magic trend line because some people think if you put cells here, magically you'll be in profit. All right, as if price won't go past that line and take your stop loss out and then move in the intended direction. But what I use the trend lines for is illustrative purposes. We hit this zone, we hit this horizontal, did I say horizontal? This diagonal supply. And I wouldn't base any trades off of that, but it's just an interesting confluence, right? If we go to the daily and we see this price action a little more clearly, you can see this is a substantial pullback. All right, for me, that's why I have it marked as a swing low and swing high. All right, and when price breaks that, that's significant. And I'm looking, but if you've been watching my videos, you'll see that I had this as a zone of supply. And I said, you know, when you break a zone of supply, you're not only taking out a lot of liquidity, but I was pointing to this area here. I said, there is supply up here with these relative equal highs. I mean, there's liquidity up here with these relative equal highs. And I believe that price, if we take this out, we're going to end up here. If you remember the video, I can leave a link for you if you don't remember the video. But that's exactly what we came up here to do. Took out, did a snatch and grab. We didn't get a break and close above these levels, but we did get a snatch and grab of liquidity. Now, where are we at right now? I have these zones. I have this supply zone, which I believe may be the target, the intent of price to go to, all right? And then we may see price turn over there, all right? That's point number one. I suspect that we may see price come up here and turn over, all right? Does that mean that we're gonna jump straight up there? No, it doesn't, but we have a bullish, momentum here, right? And every impulse requires, usually it follows that there's going to be every impulse is corrected, right? Impulse correction, and then the next impulse. So I'm looking at this area. I'm also looking at this magic trend line because I believe this was an inducement point to get people to trap sellers. All right. There are people who are selling, who took all kinds of went into all kinds of profits, and here come price to come and get you. All right, to come snatch your stop losses up here as it makes its way to mitigate this unmitigated zone of supply. There is a lot of selling orders in here. All right, because it hasn't been retested yet. You understand the logic? That's why price is going to be drawn higher. Now, what I want you to see is this. I have these zones marked out on the 4-hour, okay? And what I'm looking for is how price reacts right here. We're at a 4-hour zone of supply. If price gives us confirmations on the 15-minute that this is where it's going to turn, it's making its correction here. You know, if we see this, I'm suspecting that we're going to break past this nasty little area of price action. You know, I'm looking for a zone of you know, what do you call it? Supply here, because there is a flip. You see, we reacted here, and then price flushed through. You know, immediately I'm up here looking for price to come back, and then we can go down lower. So I'm definitely going to be seeing, I'm going to definitely be looking out for the reaction to that area. All right. But first things first. First things first. All right. We got to see if what the reaction is here. I'm looking for price to do that. Okay. And we'll see what happens when it gets here. If it breaks through this, then definitely I'm looking for price to come up here. Okay. The bearish scenario is if we break this low with a break and close, a 4-hour break and close below that. One, we're probably coming down into this zone, which is a larger. Let me get rid of this, which is a larger zone of, dang on it. Thank you. A larger zone of demand, and we can come inside there for a deeper penetration. All right, this is a daily zone, and here is the extreme of that daily zone. So if price comes down here, we'll see what the reaction is when it gets here. All right, but I do believe that once we break this, we're looking at the bear market. All right, we're looking at the market turning bearish, at least down to this region. All right, where we had that breakout. Okay, so I am looking for reactions. All right, we're going to start with this reaction here. Okay, we're going to look for 15-minute confirmations to see if price is going to turn bullish and complete its mission up to this zone. If it breaks here, I'm looking for the reaction down in here. But in the meantime, you know, I'm not going to be waiting. I'm going to look for intraday trades, of course, on the flip zones. When price breaks through here, I'm definitely going to be waiting up here for that supply that is left behind for that flip to take it down. We'll see. Well, I'll look for my 15-minute confirmations, and I'll take that down. If price bounces up here, I'm looking up here, all right, for that 15-minute confirmation to take price down. Okay, I will take a long from here. If I get those confirmations, I'll take the long, the buy to the sell. Yes, I will. You know, but not you do nothing, you don't enter without confirmations. Period. All right. Now we have similar setup on the other indices, but I want to keep this simple. Okay, I'm trying to keep this simple for you. Forget all my intraday aggressive trading and whatnot. All right, just understand that there are flips involved. That this zone was a what do you call a supply zone, right? And this was the reaction to it. All right, price punch through. This is the area I would look for the flip. You understand? All right, this was supply. All right, and price is fighting its way through this. If it makes it through, I'm looking here, where the demand is left behind. And I'll see if we can take that any further. I love my flip zones. That's my bread and butter. All right. So look for the same thing. Come on. Doggone it. All right. This is the NASDAQ. Similar situation. You see how we peaked above this the trend line. All right. I'm looking for the same areas. All right. People who took shorts here, people who took shorts on this trend line, they're hurting. They're out of the trade. All right. They just got stunned because I believe this is inducement. And we took that liquidity. And we're going to see if price is going to continue higher from this zone. Right. If it breaks through this zone, I'm pretty sure we're going to hit down here. All right. And if it breaks through this zone, again, this is the reaction. This is the daily close below that zone. And I'm looking for price to come back up in here and give me a high probability trade to the downside. All right. If it breaks, we got to look for that break though. All right. But prior to that, we're going to see what the reaction is here. This is a pretty good zone. All right. Why? Because this was supply extended over. Here's the reaction. Here is the extent, the extreme of that reaction. We broke through. We're back to the zone for the flip to demand. Here we go. We broke supply. Here is the demand flip. We take that up. Keep it simple. All right. Let's go to the who's next? Dow. Dow has a similar situation. See how it broke that trend line? Boop. If you took shorts, you put your stop loss above the trend line, you're hurting. All right. So we took the zone, we took the liquidity up there, just like the other two indices. All right. We have a zone here. These wicks are sell to buy, right? Sell to buy wicks. All right. What I'm looking at is price coming back, just like in the others. I'm looking at price coming back to that breakout point. All right. I'm looking at the reaction here to this zone. All right. And the demand that it left behind. And I'm looking for price. If it comes down here, we can take it up. Easy, easy peasy. Now, we got to see how price is going to react here on the 4-hour. Let me go to the 4-hour. This is the Dow now. All right. We got to see how price is going to react to this 4-hour. And this is where we are right now. Why is it doing that? All right. Got to see where it's at right now. So I like this zone. It's pretty clean. There is no inducement here other than the generated liquidity as it made its way back down to it. So I do like that aspect, but it didn't give that definitive what do you call it, swipe, the sweep of liquidity. But I want to see what the reaction is. So far, this is a pretty healthy reaction, but I'm looking for the 15-minute, and I need to see that break of structure. It should look like this: down, pull back, a lower low, a break above that pullback high. All right, I need to see that and price return to the demand zone that is here. And we can assume that this downward momentum is that downtrend on the 15-minute is over. All right. So, you can look at it here. We break this high like that. I'm waiting for it to come back so we can take this up. You understand? Boom. That is the conservative approach. All right. If it breaks, I don't think this is going to hold, honestly. I think we're going to fill this imbalance and we're going to come down here for that larger flip and then go up, because this would just be a retracement to discount and then up. All right. I hope you understand my logic here and my reasoning, my analysis is what I'm talking about. All right. And do hit the like button if you did. All right. And subscribe and share with a friend. All right. Let them know, hey, there's a guy giving some decent analysis here, and we might find something beneficial. All right. Do leave some feedback on the U.S. stock exchanges. I might not have the best ideas here. Maybe you got a better one. You know what I mean? Maybe you have a clearer indication of something, or just give me an opinion. I like to get feedback from my people. All right. And I will see you in the next video. Hey, check out the video that's on your screen right now. This is part of the analysis that I put out for the day and yesterday for this upcoming week. You want to catch it all? Click on it. I'll see you in the next video.